What's up, guys, everyone? Glad to have you here again. Today, we need to talk about something that's been raising a lot of eyebrows across the crypto world, Kaspa. According to a detailed report from Kaspa Daily, the amount of Kaspa tokens flowing into exchanges has reached an all-time high, and the timing of it is very suspicious. It happened literally right before the market took a big dive, and honestly, that can't just be a coincidence, can it? So, here's what I've been thinking. Are we really supposed to believe this is just random volatility? Or is there something more coordinated happening behind the scenes? Because when data aligns this perfectly with major price swings, it makes you wonder if certain people knew what was coming before it happened. And I'm not just throwing that idea out for drama. It's a legitimate question every serious investor should be asking right now. This video is for educational purposes only. It is not financial advice. Always do your own research before investing in crypto. Let's actually break down what's happening inside the Kaspa ecosystem, because once you look deeper, the picture becomes much more complex and interesting. Reports from multiple blockchain tracking sources confirm that around 60 million KAS tokens have recently moved into exchange wallets. Now, on the surface, that might sound like a bearish signal, like a bunch of holders getting ready to sell or short the token. But here's where I want to offer a bit of nuance. Exchange inflows aren't automatically a bad thing. Yes, sometimes it means selling pressure is on the way, but other times it can indicate that institutional or smart money investors are preparing for a repositioning, maybe even accumulation ahead of a big market move. In short, nobody really knows for sure. And to be completely honest, anyone claiming they do know with absolute certainty is probably just guessing with extra confidence. Now, here's the twist that makes this situation so fascinating. Despite the price correction, Kaspa is still ranking 4th overall in bullish sentiment across the entire crypto market. Let that sink in for a moment. Prices are dropping, traders are panicking, but the overall community sentiment remains incredibly strong. That kind of conviction is rare. It shows that beneath the noise, there's a community that truly believes in the long-term vision of what Kaspa is building. That level of loyalty doesn't appear out of nowhere. It usually means people have been following the project's development closely, and they understand its underlying technology well enough to stay confident even when the charts are bleeding red. These are not just casual speculators. These are believers who see something real being built. And that's becoming more and more uncommon in today's market. Let's move to what really matters, the network fundamentals. Because in crypto, hype can push prices around temporarily, but in the long run, the network's health determines whether a project survives or fades away. Recent data from Kaspa Daily shows that the ecosystem remains impressively active, with roughly 700K active addresses and over 1.5 million daily transactions recorded throughout the past week. There was a small dip around October 14th, but activity quickly recovered afterward. That's an important detail because it tells us real users are still on-chain, still transacting, and still participating. Even while traders are panicking on exchanges, the network itself isn't slowing down. This is the kind of resilience that separates genuine, utility-driven projects from overhyped tokens that rely only on speculation. And speaking of fundamentals, let's talk about Kaspa's technical progress. The network's BlockDAG architecture is now achieving sub-10-second transaction finality, which places it among the fastest Layer 1 proof-of-work blockchains currently running. That's not a small achievement. In fact, when you compare it to other top-tier blockchains, Kaspa is quietly positioning itself as a leader in transaction speed while maintaining decentralization. That's an extremely difficult balance to pull off. So, while short-term traders are stressing about liquidation levels and margin calls, the actual technology keeps improving. That's the real signal investors should be paying attention to. Because once the broader market stabilizes, those technical advantages could easily translate into renewed momentum and growth. Now let's shift gears and analyze the price action, because that's where most people's attention is focused. On the 4-hour chart, Kaspa has been in a steady downward channel since mid-September, making lower highs and lower lows, which is classic bearish structure. The most recent rejection came around the 6 cents level, where sellers showed up aggressively. But the most shocking event was that sudden, massive liquidation wick that dropped the price all the way down to $0.0097. That kind of move screams panic. And it often signals the exact moment when institutional buyers step in quietly to accumulate while everyone else is scared. After that huge drop, Kaspa quickly rebounded towards 5 cents, though momentum started slowing down after the bounce. Right now, the key resistance to watch is around 5.5 cents. Breaking above that zone could push the price towards 7 cents, which aligns with an important previous support area that flipped into resistance. On the flip side, the support levels to monitor are 4.8 cents, then 4.3 cents, and finally the psychological floor near 4 cents, a level where bulls are likely to make a strong stand if selling pressure continues. From a technical indicator perspective, the RSI is currently sitting around 38, bearish, but not yet oversold. That suggests there could still be room for a slight dip before a potential reversal begins. Meanwhile, open interest has crashed dramatically from more than $700 million down to about $230 million. Surprisingly, that's actually a healthy sign. It indicates a much-needed reset after a period of excessive leverage. When overconfident traders get flushed out, the market usually becomes cleaner and more stable, setting the stage for genuine price discovery. Looking at the long versus short ratio, we can see that long positions have dropped significantly, while short interest has increased slightly. This kind of setup creates a fascinating dynamic. When most traders are betting on further downside, the market sometimes does the exact opposite, just to catch everyone off guard. That's how reversals are often born, from extreme sentiment leaning too heavily in one direction. Now let's talk about another key indicator, the MACD. Recently, it's been printing large bearish bars, but the red histogram candles are now shrinking, which means selling momentum is losing strength. If we start to see the MACD lines curling upward, that could be the first sign of a potential trend reversal. So, while we're not in bullish territory yet, we might be approaching a cooling phase in this ongoing downtrend. For the short term, meaning the rest of this week, I expect Kaspa's price to remain range-bound, likely consolidating as traders wait for a clearer signal. In my view, if bulls can defend the 4.8 cent zone and then manage to push past 5.5 cents, we could see an upside move targeting 6.5 cents to 7 cents, maybe even touching 8 cents if volume supports it. But if the price loses the 4.8 cents level, then 4.3 cents and even 3.5 cents could come back into play as lower supports. Now, stepping away from the technicals for a moment, let's discuss what truly matters. Kaspa's fundamentals are still strong. The development team continues to execute on their roadmap, and the network remains robust. Yes, the Probit Global delisting earlier this month temporarily hurt sentiment, but it didn't damage the project's core structure or community activity. Kaspa still maintains liquidity on major exchanges like Whitebit and Swissborg, ensuring that trading and transfers remain smooth. To be transparent, here's my honest take. The gap between Kaspa's technical progress and its current market price is getting wider, and that kind of mismatch can create rare opportunities. When a fundamentally solid project experiences short-term pain due to broader market chaos or mass liquidations, that's often when patient investors quietly start to accumulate. I'm not saying you should jump in blindly, but what I am saying is that the risk-to-reward ratio is beginning to look a lot more appealing than it did a few weeks ago. If Kaspa can stabilize, hold its critical support zones, and push through the upper resistance levels, the recovery potential could surprise a lot of people. Either way, we're at a decisive moment for Kaspa. The market is testing its limits, sentiment is fragile, and traders are trying to guess the next big move. But underneath all that noise, the fundamentals are still strong. The network is fast, the technology is unique, and the community remains committed. So here's my final takeaway. Kaspa may be facing short-term pressure, but it's not broken. The team continues building, the blockchain keeps improving, and the conviction among holders remains firm. Eventually, the market price always catches up with real progress, And when that happens, those who understood the bigger picture will be the ones smiling. So for now, stay patient, stay informed, and don't let fear dictate your decisions. Crypto markets are built on cycles of emotion, and understanding that is how smart investors stay ahead. Thanks for watching. Like the video, drop your thoughts in the comments, and hit subscribe if you want more real-time updates, moves, market trends, and hidden gems.